Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 9th of May 2019, so welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now the first one I want to touch on here is the S&P 500. Now looking at this index, yesterday it closed in the red again, and of course looking at the cash index right now, we can see that well, we're going to have a nice good downside gap here today on the opening bell, and looking at the price currently, it is near the this little key area of support, this target that I was talking about in one of my videos where I was covering the S&P in one of my previous videos this week, and basically this is the target here that we've got, the 2860 approximately there. The price is currently slightly below that already, so in a way what we could see here today is maybe a bit of a correction back to the upside, and then maybe another round of selling if this level here, the 2860 level, is going to remain strong. Basically for us now, of course, all this is kind of still looking quite bearish. In a way, looking at this 4-hour chart right now, if we see this further move away from this 2860 level, well, keep your eyes on this 200 EMA here, around the 2810 zone approximately there. Slightly below that, we do have this little area of support here near the 2785 zone, so just slightly below the this 200 EMA and this of course the psychological 2800 level. But again, for now guys, of course, this is kind of still looking quite bearish, and if it continues to slide further away from this 2860 level, then yep, we will target this 200 EMA initially. We'll see how it's going to perform around there, and just to kind of remind again, this area is near the 2810 zone, but slightly below that we do have this perfect, or shouldn't say the word use perfect, but a good potential area of support here near the 2785 zone, so keep your eyes on that one. In terms of the upside, if this decides to push back above the 2892 level, that's great for the bulls. We could see maybe another push here towards the psychological 2900 level, but this is where it could become interesting if for more bulls, of course, if this 2900 level fails to withhold the bull pressure, and we could then see another push higher towards the 2913, or even further up here towards these higher levels. So for now, of course, we are more bearish than bullish, but again, be very careful just in case this suddenly, let's say, reverses back to the upside here, travels all the way here towards the 2892 zone. If we see such a move, then yep, we'll be very cautious. We'll remain somewhat neutral, of course, but in order to consider higher levels, we need to see that nice good push above the 2900 levels. So keep your eyes on that one. Jumping into another index very quickly, CAC40, so the French index. I talked about this one as well yesterday, by the way, and this is what I was saying, that we may see a push higher here. We may see a move towards the 5435 zone, but if it doesn't reach that, then we could see another leg of selling here. So as you can see, the index kind of sold off nicely and continued to sell off today, and it's selling off, and now it's dropping below this key area of support that I was talking talking about the 5,340, which is around the 200 EMA here on the 4-hour chart. Now that said, of course, let's see how this day is going to end and where this day is going to close. If it's going to close below this, of course, this increases the chances for this index to slide further down, maybe towards the 5,265 level, or even actually going further down towards this key area of support near the 5,205 level. So keep your eyes on that one. Very good potential area of support. But then again, all this is kind of more for the kind of near term. For now, from the short term perspective, certainly, of course, keep your eyes on today's close, where this index is going to close. If it's going to close below this, then yep, it increases the chances for this one to move lower. But if it's going to stay above the 200 EMA, we may see something, maybe a bit of a correction here back up, and then of course we will target slightly higher levels. The only thing is that probably just for that little better confirmation of the upside, what you could do here is keep your eyes on this little tentative, maybe tentative downside resistance line taken here from the high of 3rd of May, and if that gets broken, then yep, wonderful, we could see more bulls maybe joining in here and potentially driving this one back up again. So in a way, in other words, you could also keep an eye on the 5,400 level. If this gets a nice push above it, then yep, we could see we could target slightly higher levels again. So for now, of course, everything is leaning more towards the downside, but again, wait for the confirmation break today. If it stays below this, then yeah, we could see maybe a further continuation to the downside. Jumping into a few one commodity, or should I say precious metal, one of my favorite, platinum. Now I talked about this one as well, and this is what I was talking about. This little area here kind of is causing us a little bit of some trouble, let's put it that way. So it did travel back up above this long-term downside resistance line taken from the highest point of 2011. Then it traveled higher, then tested this short-term upside support line from underneath and kind of retraced back down, and now it's kind of falling back below this long-term downside resistance lines again. So that said, we're not going to really kind of jump into conclusions yet in order to, let's say, to say that this is now going to be bearish and we're gonna see only the downside right now. No, we will need to wait for a nice good break and a close below the 840 zone, 40, 41, something like that, approximately there. This is where, of course, now you're wondering why this one, not, for example, the lower one. Of course, the 835 level is just could be for those who are more on the cautious side. But if this decides to drop below the 841 level, this is near the lows of the 2nd of May, basically. So if we see a drop below this, that's great. We may see a further slide lower, but this is, of course, where we will target the 835, but if that fails to withhold, then yep, further declines could be possible. But at least here we will be kind of a bit of one step ahead of it, and in a way we could also place our stop losses just in case this decides to reverse back up here. If it does reverse back up, and let's say, for example, if it drops lower and it then reverses back up, if the last chance for kind of the bears to step in here again would be near this downside resistance line. So in a way, if this reverses back up, travels higher, and but again fails to drive above this downside resistance line, now this is where it could become really exciting for the bears, and we could see this one sliding down for towards these lower areas like the 821 or even lower than that. But in terms of the upside here, of course, if this pushes back above this downside resistance line, we're going to be somewhat bullish, and in a way we're going to keep an eye on this little area of resistance, this little area right here near the 863 zone, approximately there. A nice good push above this could, of course, open the path towards slightly higher levels, but we're not going to be that much kind of radical on the upside yet. Of course, we could see maybe this one pushing back up here, but in order to kind of, let's say, consider higher levels in the near term, or should I say slightly maybe more longer term, we initially we would like to see a nice good push above the psychological 900 level. I do understand that we do have this nice good obstacle here near the 915 level, but if that fails to withhold, then yep, further acceleration to the upside could be possible. So in other words, for us from the long-term perspective, the 900 level, that's what we're looking for. And in terms of the downside here, we will start considering lower areas if we see a drop below the 841 zone. Jumping into a few pairs now, EURCAD, it on one hand it seems positive, it's trying to push higher, it's trying to kind of overcome this key area of resistance. It did try to do that twice already today, so this 1.5110 level, which is, as you can see, acting as a very good area of resistance. Previously it acted as a good area of resistance here on the 30th of April. Also in the past here, as you can see, it took kind of the role of both resistance and support, but for now what we're looking here for is a nice good close of the 4-hour candle above this 1.5110. Of course, then we're not going to go drastically higher. We will target the next potential area of resistance here near the highest point of April, which is around the 1.5155. But if that fails to withhold, now this is where it could become interesting, as we could be then targeting even higher levels. But for now, basically, guys, long story short, let me just quickly put this on the chart here. So I'm gonna quickly highlight this for our future reference so that we would know where we're probably going to look into this one maybe tomorrow. So we'll see how this is going to perform. But again, of course, if it does get another pop here above this 1.5110, and especially if it's going to get a nice close of the 4-hour candle here above this, then yep, for potentially we could then target the 1.5155 or even slightly higher levels. In terms of the downside, well, we'll have to be very cautious here. In a way, we could try to find a level here, like for example the 1.5057, but what you could do here is keep a close eye on this little upside support line. So in a way, if we see a drop below this little tentative upside support line, of course we could consider slightly lower levels, but to be honest, for just that better confirmation, probably wait for a drop below the 1.5057, approximately there. Even you could actually lower it down towards the 5050, 1.5050, of course. This way, if we see a drop below that level, we could also see a break below all these EMAs here, especially the 100 and the 200 EMA. So that's why for now, of course, the downside is slightly off the table. But again, if we see a nice rejection here from the 1.5110, we could see a drop lower, and if this upside support line breaks and we see a rate drop below the 1.5750, if you wish, then yeah, we could target these lower areas. But let's see how this is going to perform. For now, it is looking somewhat more positive than negative, but then again, we cannot really kind of jump into this one yet because we need to see that nice good close of the 4-hour candle above the 1.5110. GBPUSD very quickly on this one continues to slide, of course, after last Friday's rally here. As you can see, it continues to travel lower. It's now hitting this key area of support that I was talking about around the 1.2975 zone, approximately there. So it's now kind of hitting that area. This is where it's going to be interesting, because if it continues to slide lower and if it drops further below the 1.2975, of course there are some good potential targets here, like the 1.2960, just 15 pips away from there. But to be honest, it could move all the way here to test this downside resistance line taken from the highest point of March this year, and we could see that that line getting tested from above this time, of course, and then we will be keeping a close eye on it, because in a way it could do something like this again. It could kind of curve up, but if it, of course, fails to withhold, then I mean further declines are possible. And if it does travel all the way here, as you can see, this is where it could be approaching a very important level here near the 1.2865 zone, which around the 25th of April acted as a very good area of support from which the pair rebounded and pushed higher. If we see a drop below this downside resistance line, and then probably this, of course, this would increase the chances for a test of this 1.2865. But if it fails to withhold, then, well, I mean, it could roll over and travel all the way down here, potentially reaching this the lowest point of February near the 1.2770 zone. So keep your eyes on down, guys. But for now, the big question here is this going to continue dropping below the 1.2975? If it will, then yep, we could see a further decline. But if this decides to reverse, and if this decides to travel back above this little area here, 1.3045. Now I do understand I'm not taking it from here, from around the 1.30 zone. I'm not taking it from this area. I'm taking it from slightly higher, because if we see a nice good push above the 1.3045, this would also place the pair back above this 200 EMA here on the 4-hour chart, and this way probably more buyers could start joining in and potentially driving this one higher again. So for now, that's the game plan. Let's see if what it's going to do with this 1.2975. It's currently breaking it, but can it actually stay below this today? So jumping into USDJPY very quickly, I'm not going to spend too much time on it because I've talked about this one this morning, and this is what I wanted to show you. This is exactly what happened this morning. So basically, we saw a nice sell-off. We were trading around here actually still this morning. So we were trading around the 109.80, something like that, maybe just slightly above that. And what I was saying, that we will continue targeting this 109.70 level, which we had a nice touch, but what I also mentioned was that we may see a nice overshoot here, and we may see a hit of this 109.60 level, which, as you can see previously, was a very important level here back in the beginning of February and also in the end of January. So and this is exactly what happened here. We had a nice break here below the 109.70, dropped towards the 109.60, and then rebounded back up, and now you can see that the 4-hour candle kind of never closed below the 109.70, and this 4-hour candle is now trying to push back. So in a way, this arrow here that was drawn, it's in a way it could work out. We may see another push here towards the 110, the psychological 110 level. The only thing is that for us to get comfortable with the upside again, at least in the short run, we would like to see a push back above the 110.25 level first, and then we will target higher levels. For now, this is going to be our little neutral territory, because in order to consider lower areas, well, guess what? We need to see a drop below the 109.60, and only then we will target lower areas. And by lower areas, well, I mean, a good potential one could be here near the 109.10. This is what I was talking about this morning. So keep your eyes on this one, guys. Keep your eyes on some of these key levels. Let me just quickly mark those for our future reference here, just in case. So basically, in terms of the downside, this is what we're looking here for, and in terms of the upside, there we go. This is what we're going to be looking at here. So the 110.25 for the upside, 109.60 for the downside. So, and actually I can actually even drag it all the way here just to show the importance of this level. Okay guys, I hope you found it useful. Thank you very much for watching and listening. Thank you very much for sticking around. I do apologize for running it a little bit over my time, but if you want to join me tomorrow morning at my Trader's Espresso, and that's as always 6 o'clock GMT time. But for now, I hope you have a wonderful evening, and I'll see you later. Bye bye.